Imagine having the power to anticipate market trends before they happen, putting you steps ahead of the competition. The thought alone is thrilling, isn't it? Well, in today's special episode, we'll dive deep into the top 5 revolutionary TradingView indicators that are changing the game forever. These tools are powered by complex algorithms designed to project the market's next move with astonishing accuracy. Stay tuned as I explore each indicator, breaking down how they work, why they're so effective, and how you can leverage them to achieve consistent profits. Your journey to becoming a more educated and proactive trader starts right now. Let's begin with the 5th, Echo Forecast Place Indicator. The Echo Forecast by Lux Algo is a smart and well-designed TradingView indicator created for forecasting future market trends. These tools employ a unique time series forecasting method named Echo, which leverages the similarity between recent price movements and historical price patterns. The core assumption of the Echo forecast is that the future prices can be estimated by identifying historical observations most similar to recent price variations quantified using correlation coefficient. Imagine you're a detective trying to solve a mystery by looking for patterns in past cases. Each case has clues that might help you solve a new similar case. The Echo Forecast method works like this detective. Just like a detective compares new cases with old ones to find similarities and predict the outcome, the Echo Forecast method looks at current market trends and searches for similar patterns in historical data. When it finds a pattern that matches the current situation, it uses this echo from the past to forecast what might happen next in the market. Key features of the Echo Forecast include customizable settings, such as the evaluation window and forecast window, which allow you to define the size of the window used for finding similar historical observations, and the forecasting horizon, respectively. Lux Algo, the creator of the Echo Forecast, emphasizes the importance of using this tool as part of a comprehensive trading strategy, highlighting that while it provides valuable insights, it should not be followed blindly. They advocate for an informed approach to trading, integrating the Echo Forecast with other analysis techniques for best results. This tool could work best with supply and demand channels, trend lines, and multi-time frame price analysis. Unfortunately, finding a suitable multi-time frame indicator on TradingView is almost impossible due to its complex nature. However, let's move on to MACD-based price forecasting, the 4th indicator on my list. The MACD-based price forecasting by Lux Algo is a sophisticated indicator designed to provide you with forecast of potential future price movements based on the moving average convergence divergence or MACD indicator signals. This tool integrates an innovative approach to price forecasting by incorporating an area forecast, which helps in visualizing potential future price developments following a MACD signal. The essence of this indicator lies in its ability to offer a generalized view of how prices might evolve after certain MACD signals are triggered. It achieves this by analyzing previous price movements following specific MACD signals and constructing forecasts based on these historical patterns. You have the flexibility to adjust the conditions for generating MACD signals through the trend determination settings, which can be based on the MACD's positive or negative status, or its position relative to the signal line, indicating uptrends or downtrends. An interesting feature of this indicator is its capability to introduce a bias to the forecast by adjusting the average percentage setting. You can tilt the forecast towards a bullish or bearish bias depending on the market outlook. It's important to note that while the MACD-based price forecasting tool provides valuable insights and predictive capabilities, it should be used as part of a comprehensive trading strategy and not in isolation. The forecasts generated by this tool are based on historical data and probabilistic models, which means they are not guarantee of future price movements, but rather sophisticated estimates that can enhance decision-making processes in trading. Next up, we have Monte Carlo Future Moves by Chart Prime. I can guarantee you have never seen an indicator like this before. The Monte Carlo Future Moves indicator uses probabilistic simulations to forecast future price movements in financial markets. It visually represents likely price paths, including bullish and bearish outcomes, and indicates extreme price levels and market biases. By employing probabilistic models to predict price movements, the Monte Carlo method helps in creating more resilient and informed trading decisions. This approach is particularly valuable in options pricing, portfolio management, and risk assessment, where understanding the range of potential outcomes is crucial for making sound investment decisions. Chart Prime team designed the indicator to be simple to use and understand by displaying lines which reflect the most likely bullish and bearish outcomes. The arrows point to these areas, making it intuitive to understand. The tool also includes extreme price levels shown in blue and yellow. This is the most likely extreme range the price will move to. To make things more user-friendly, the indicator also displays a background heat map. The brighter the price level, the more likely the price will end at that level. To use this indicator, you want to first assess market bias. From there, you want to target the most likely polar outcome. You can use the range of outcomes to assess your risk and set a stop within a reasonable range of the desired target. By default, the indicator projects 10 steps into the future. However, this can be easily adjusted in the settings. Generally, this indicator excels at midterm estimations and may yield inconclusive results if the prediction period is too short or too long. You can change the granularity of the outcomes to give you a more or less detailed view of the future. That being said, a lower resolution can make the predictions less useful, while a higher resolution can give you a less useful picture. So, what do you think about this futuristic indicator? Let me know in the comments. The second tool on my list is Next Pivot Projection by Projection Indicator. It is an experimental tool that builds on divergence backtest results to forecast future pivot points in the market, including one unconfirmed pivot. It utilizes historical data on pivot occurrences and their characteristics to project future pivots, potential positions, and prices. The indicator provides visual clouds representing historical average projections for pivot points, offering insights into possible future market movements. The percentage displayed on the labels represents how likely the price will reach projections. Based on this information, you can prepare for upcoming market moves accordingly. Another factor to consider when going long could be a simple price action analysis, like finding key support and resistance levels. In this example, we see the price is near a strong demand level around 100 USDT per coin. Based on this simple technical analysis, we can predict the price increasing to at least 104 USDT per coin, which is indeed correct. This is just one example of how you can benefit from using the Next Pivot Projection Indicator. Test it out and let's move on to the indicator topping our list. This tool is called the Next Pivot by KOSF Trading. The Next Pivot by KOSF Trading is a comprehensive technical analysis indicator available on TradingView. This indicator is designed to help traders forecast future price movements by comparing historical price sequences with the current price sequence using various similarity measures. What this indicator can do is insane. Check out these features. First, the next pivot uses multiple similarity measures to compare up to 100 bars of historical price sequences, with the current price sequence allowing you to find the most similar past market behavior. Second, it can forecast the price path for up to 250 bars into the future, giving you insights into potential future price movements. Third, apart from the price path forecasting, this indicator also forecasts the zigzag pattern up to 250 bars ahead. The zigzag pattern is used to identify price trends by filtering out minor price changes. This means you can predict future long-term market bias. The indicator also employs various statistical measures to find the most similar historical price sequence to the current situation, including Spearman, Pearson, absolute difference, cosine similarity, mean squared error, and Kendall coefficients. It includes a forecasted linear regression channel, adding another layer of analysis by showing potential support and resistance levels based on past price movements. Linear regression can be enabled in the indicator's inputs. Here, you can also change the similarity calculation and more. However, it's important to note that while the next pivot can provide valuable insights, its projections are based on past similarities, which may not always predict future movements accurately. Market conditions can change and random fluctuations may affect the reliability of the projected pattern. That's why I strongly recommend backtesting these indicators with paper money to evaluate their performance over time. Thanks for watching this video. Happy trading!